Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the DMC, our daily market commentary. Hope you guys are having a great day. We are going to take a look at our markets from an educational perspective for breakouts and reversal opportunities, seeing if there is anything out there worth trading today. If you're new to the channel, make sure that you hit that subscribe button, you hit the notification bell. Leave a comment down below. What do you think we're going to do this week? Do you think this week is going to be bullish, bearish, or neutral? Just want to get your overall opinion. Bullish, bearish, or neutral? And by bullish, I mean maybe up more than 3%, bearish down more than 3%, or neutral, somewhere in between. Love to hear kind of what people think as we are heading into this week. My answer is I don't care. I'm going to let the charts tell me what we think is going to happen. All right, let's go ahead and dive in. So you're going to see a couple of lines on here from last night's live trade room. For those of you that joined us in last night's live trading room, hopefully you were able to catch some of these positions. We did look last night and said, hey, there's a bit of an opportunity if we get a rally up out of here for a retest. And now it happened at the London Open, so certainly probably most of the people that are in the U.S. weren't up to trade this little move back up. But more importantly, we talked about the fact that if we start basing through here, is there an opportunity for price to break down, and then this becomes a reversal opportunity? And so while that level already kind of hit and moved away, I'm going to leave this on here because I want to see, does this become a potential breakdown point if we get basing right in there? Now, above us, we've got a high up here, but on a 15-minute chart, that really is leading into a little wick over wick area that we have up in here. Now, why am I looking at these two areas for potential breakouts? What I'm really paying attention to is the fact that our 4-hour is technically, I've got a lower swing low, but I don't have a super clean lower swing high as of yet. So our momentum has definitely shifted off of the move up, but our full downtrend hasn't been officially recognized yet because I don't have a lower swing low and a lower swing high. So you can break one way or the other in this kind of an instance. And so if we do break above this 45.56, there's a chance that we will get some basing in there. That's not a big move to go from here to here. So you may not get enough reward to risk on there, because there's a decent little supply level up there that I think we could get a little reversal on. So, without the basing, that's certainly not going to be any sort of a trade. And even with the basing, you may not get a 2-to-1 because you don't have a great room to roam. Looking at the NASDAQ, in our NASDAQ position, we had looked at a very similar picture if we got something below this 14,808. We never really did come below that 14,808 last night. And now we are sitting at the origin of this move down right through here. Now, I don't love this for a short, only because we've already hit it once, so it would have to be a confirmation. And if it's a confirmation, you've got to trade halfway into the level. Well, halfway into the level would be right there, 50% of the way into the zone. We've certainly not got into there yet, but our risk in that case would be still an entry down here with our stop. Even at the best case of scenarios, let's say that we make our stop really tight and we go here. Well, a 2-to-1 reward to risk on that. There's a 1-to-1. And here is a 2-to-1. In my mind, this area here, this opposing demand, is a bit too close to justify a 2-to-1 reward to risk. And so that's why I don't have that level marked off as an area that I'm willing to look for a short. I just don't find that to be a great setup and a great opportunity. I'd rather see a breakdown below here. Now, you may say, well, Chuck, what about this area of demand right here? And I would say that was a great demand area until this long lower wick right here, which traded more than about halfway into that zone, which then makes this no longer a valid level for me to use for a long in the future. So that's kind of my thought on that S&P or on that NASDAQ as a breakdown below here. Now, the Russell actually performed better than the other markets, and I thought gave us a better opportunity for upside potential. And what I was specifically looking at was this little unbalanced wick over wick where we got one move away right here. You got a second touch into it right here. We didn't really get a lot of good opportunity last night to get into this for a breakout, and there was a little pop above. But so I think it's still valid to take a long on a breakout above this 2091. Just have a nice tight stop. Where I think there is a better room for this move from here up into this region. So I think you could get an upside breakout. If you want to be a bit more conservative, you could take this and move it up to about here for the breakout, maybe 2093, but I'm okay at, somewhere even in between there for a potential upside breakout to the Russell, as the Russell has really, it held up last week better, I think, than the other two markets at the end of the week. Our 4 hour on the Russell 2000 it's still down like the others, but it doesn't seem like it had fallen quite as far on that Thursday afternoon pullback that we had. All right. Taking a look at our energies and metals, primarily crude oil and gold. Crude oil is sitting above, I think, a potential breakdown point right here. There's 97.93. Not a whole lot of movement occurred in the overnights. We gapped down at the first candlestick last night. I say gap down. It was a teeny weeny gap. But we did gap down a little bit, traded up, and then, just dropped back down into that region. And so I think below the low is an opportunity on a small breakout. There is an hourly demand level back here. Now, I will say this hourly demand level was created on the older contract. And so, if we get basing in here, I think you're going to have enough room to roam from there to there. I mean, that's a full point in crude oil. A full point in crude oil. You do that on 2 or 3 contracts. That's a pretty good day, depending on what it is you're trading and what you're looking for. The key is that we don't have too much risk. You put your stop above the most recent pivot. Looking at gold. Gold last night, after we kissed this level, that was a beautiful kiss off this move away. Hopefully some of you that watch the DMC were able to catch this and make a little bit of cheddar on this move. We're in between areas of demand and supply, and really this just tells you don't trade this. Just wait for price to come into quality zones. I don't really have a quality demand until down in here, and then a decent supply is up here, but by the way, that's already been touched, so we've got to make that a confirmation since we did get a move away from it. And so I'm just going to hold off. I'm going to hold off on really anything. There's nothing really to add on gold. Natural gas actually is sitting in my mind at a spot where we could get a decent little breakdown. Looked at this last night, and last night when we looked at it, we were sitting right about here. But I like the fact that we've got this one touch there, one touch here, and then over here there's wicks that came into this line, this 5672. If we break below there, I'd like to get a little bit of basing. Right now, I do not have the prerequisite basing for a short. I'd like to get 2 or 3 small candlesticks right here, and then you've got a good opportunity for a breakdown. This is the one I'm going to pay probably the most attention to this morning, heading into our trading for early in the day. And then as far as some of our other markets for today, copper not giving me a whole lot, although a pretty nice symmetrical triangle pattern is forming here. So keep an eye out for a breakout in copper, as you are getting a little bit of that wedge pattern here that's forming. So look for a potential breakout in here. I don't know that we're in a great setup for that to give you a strong move out of it one way or the other. We're sitting above on the 10-year note. Another potential breakdown spot, this 121.250, where we've got basing here. One touch, 2 touch. I need 3 touches and basing, and then room to roam. But if you look at this, one thing I pointed out last night is just going back. That's a lot of supply levels above us that we never retested. All right, I'm looking at all of these areas above us of supply that never got retested, and so you have to take breakouts if you want to participate in a strong downside move, and sometimes that forces you to get in a little earlier than you might want, and I think that could be the case on the next leg down of the 10-year note. Remember, as the Fed stays a bit more hawkish, then I think we're going to have more of this continuing to fall. The euro, we looked at the euro last night as a potential for a breakdown. We did get a breakdown below our level. Unfortunately, we didn't get quality basing, and unless you were in Europe, you didn't really get a great setup. Now, the breakdown did occur, and it created a little wick over wick right here, which gave you almost an immediate retest and then continued to drop. Now, we've come back to the origin of this move, the big speed candle move, and that was really our target on a breakdown. And so now what you can theoretically do is look to see up here if we come back into this region for then price to continue to drop. So if you took the long on here because of this speed candle, then I think you've got a very, your first target would be this area right up in here. Stop at the tightest, I think, should be down here. So that gives you a little bit less than a 2-to-1 reward to risk. So it's not a great setup, especially considering that our 4-hour momentum has been down. Now, technically, I don't necessarily have a lower swing low on a 4-hour. My 4-hour is kind of sloppy. So if you want to take it, certainly feel free. Just be aware of that overhead supply, which was created on the breakdown trade right through here. And then one or two others. We looked last night at the New Zealand dollar coming into this region here. Looks a little bit like what we just looked at in the euro. We got a little touch and a little bit of a move away. 1, 2, 3, 4, 5, 6 candles later. We've not really started to move. So at this point, take your stop, move it to break even. If you did get into that short, I think that's probably the best trade, and I'm going to remove it for today because I don't know that that's a good setup going forward since we've already hit it once. But if you took it, take your stop, move it to break even. There was not a whole lot to look at in currencies beyond that. Great British Pound, I looked at this area here last night because of this triangle pattern that had been forming for a potential breakdown between below 1.308. We are sitting just above there, as I would said, if we get this breakdown below here, it has to include basing, and we wind up popping above. I'm wondering if that's just a shakeout move, and now we've been dropping ever since then. We are getting a little touch into this region, so keep an eye for basing here for a potential breakdown in the Great British Pound. And then Japanese yen's a little sideways, and the Australian dollar is pretty sideways, so not a lot in either one of those. So that's all I have for today, everybody. If you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.